importantly, we announced the refresh strategy back in May 2024, and there were 4 key pillars to that strategy. Firstly, we talked about recycling $2.8 billion of capital, and pleasingly in the last period, we've now already achieved $2.2 billion of announced and completed transactions. So we're saying better capital markets. We've still got a number of transactions ongoing, which we expect to complete in the second half of this year. Secondly, and for us, we determined that we're going to exit international construction. We've now completed the US sale of our construction operations, and we've announced the sale of our UK operations, and we expect to complete that in the second half of this financial year. And then finally, we announced another $125 million of cost out that we would take, and we were restructuring the group's management structure, and we are on track to deliver that, and we're very focused to hopefully beat that for the year.
Tony and Martin here. Pleasure having you on the show. So Lendlease is global. It's a multinational, but you were just describing what has been happening over the past year or so already, and which is exiting offshore markets to focus more, I think, on what's happening where you are right now at home in Oz, right? So talk to us about that. Just overnight, or rather yesterday, I mean, for residential, right, housing, dissatisfaction in Oz is at a record high. It's a huge political issue and likely will feature in May when Australians go to the polls. And you just had your housing minister just yesterday imposing a 2-year ban on foreigners buying existing housing in Australia. That ban could be reviewed. It depends on how it goes in terms of freeing up supply for actual Australians. Let me ask you, this is for existing homes, residential. Potentially, how could that impact your business, though? Because you're in investment in developing and construction as well, including resi.
Yeah, look, the residential sector, Lendlease focuses, I would say, on inner urban apartment dwellings, more in the mid to luxury market. So we are a developer who develops new stock. Of course, you need the market to function when it's looking to people to trade out and buy product. I think where we look at the overall market, over the last 12 to 24 months, Australia has seen affordability levels reach a peak where we've had significant immigration in the last 24 months with some million people who have migrated to the country. I think what we need to focus on is really supply. And so as a business, from a Lendlease standpoint, in the last 6 months, we've launched our build-to-rent. In the US, we call it multifamily product. In Australia, we've launched some 2,000 apartment units. So we see there's been strong rental demand for that product. We are focused on that mid-market and luxury market, and we still see significant demand in the sector. So we've got some pre-sold apartments of $3 billion. A lot of our projects are already over 75% sold, and so we'll see a continual level of sales. But what we would see is probably more likely, potentially tomorrow, an interest rate cut. I think that will help the broader residential market. We're more focused on that mid to upper end luxury market, and we see less sensitivity when it comes to interest rates in that segment.